What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm bright and early doing this video before I start my clinical rotation. And I bought this real estate investment trust. It has a diverse portfolio. I sold it and I rebought it. I told you I was going to rebuy it eventually. It has consistent dividend increases. And my goal is to get to 200 plus shares on it with my M1 Finance dividend portfolio. That way I can start buying the dividend growth stocks. It is considered a dividend growth stock, but it's really slow compared to most real estate investment trusts. But it really has done well during the pandemic. And I'm going to reveal it to you, and I'm going to explain to you why I rebought this. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. I would appreciate it. Let's check this REIT out right now. And that REIT is WP Carey. It's sitting at 72.47. Has an average volume of 1.18 million. Market cap is 15.50 billion US dollars. Year range was 67.77 to 89.63. It's not doing too hot against the S&P in the past 5 years, which is attractive to me because I can buy it at a cheaper discount and I don't have to keep up with it. It's not going to screw up my distribution on M1 Finance where it goes like crazy and I just can't keep up with it. So that's one thing that's very nice. And its previous close was 72.47. So first off, my plan, M1 Finance, is to get REITs like WP Carey, innovative industrial properties, medical properties trust, Omega Health investors, get the dividends from those guys and buy my dividend growth stocks like Starbucks. So I have a small percentage on Starbucks. Okay, I'm throwing 500 a week into my dividend portfolio on M1 Finance. I'm starting to load up with my covered call ETFs, which I'm going to start revealing to you more information on these guys and what I plan on doing. But getting to 200 shares is going to be a game changer with these guys in the long run. So let me go over these guys as a company. So they've been 50 years strong. I just want to go over that. So investing in the long run. WP Carey is one of the largest diversified net lease REITs. Diversification is important. I'm going to go over that. Specializing in the acquisition of operationally critical single tenant properties in North America and Europe. So already they're not just in the United States, they're in North America and Europe. So we're going to look over these guys. So this is what I like about these guys. They're big. The bigger the better, honestly, with REITs. Just being honest with you. So they're a large diversified portfolio of high quality real estate. So their asset management teams in the US and Europe are dedicated to proactively managing our portfolio and working with our tenants to ensure that they have real estate that they need to meet their evolving business objectives. So their properties, 1,446 properties. They have 176 million feet. Annualized base rent of 1.4 billion. The occupancy rate is fantastic at 99.2%. I'm going to go over their overall portfolio as well. 397 tenants and leases with rent escalations at 99%. So funds for operations, that's always important. Forget about PE ratios when it comes to REITs. So here's their geographic diversification. In the United States, they're at 61.8%. Other is 2.5%. I'll go over the map. In Europe, 35.7%. The property type diversification is what's very important as well. Diversity is better. So right here, their portfolio information reflects pro rata ownership of real estate assets, and they put in parentheses, excluding operating properties as of March 31st, 2023. Other includes education facility, hotel, net lease, laboratory, specialty, fitness facility, research and development, student housing, net lease, theater, funeral home, restaurant, land, parking, and outdoor advertising. So the numbers may not add up to 100% due to rounding, okay? But Industrial is 27.3%. That's not going anywhere. Warehouse, that's not going anywhere. 24.2%. Office, 17.2%. It's good to have some office in there. Some businesses like people coming in office. Retail is 17.4%. Self-storage net lease is 4.5%. And other is 9.4%. The tenant industry diversification is retail stores, 20.7%. Consumer services, 8%. Beverage and food, 7.7%. Grocery, 6.1%. Automotive, 6.1%. Cargo transportation, 4.6%. Healthcare and pharmaceuticals, 4%. Capital equipment, 4%. Containers, packaging, and glass, 3.5%. Business services, 3.5%. Construction and building, 3.4%. Durable consumer goods, 3.3%. Sovereign and public finance, 3.2%. Hotel and leisure, 2.9%. High-tech industries, 2.5%. Chemicals, plastics, and rubber, 2.5%. Insurance, 2.2%. Telecommunications, 1.9%. Metals, 1.8%. Non-durable consumer goods, 1.8%. Banking, 1.7%. And other is 4.6%. So again, diversification is more important. I'm looking at dividend safety. I'm looking at size. Size does matter. That's why I invest in banks like KeyCorp. And I invest in stocks like Huntington Bank shares. Banks that are big. Big. Okay, bigger is better. And I'm telling you, when it comes to REITs, bigger is better. Usually they've been around, again, 50 plus years these guys have been around. Like I said, I was going to sell them, and I did, and then I rebought them. And I'm not complaining at all with my repurchase of these guys. So here's the other thing. Their top 10 tenants. One is U-Haul, okay? Their top 10 tenants represent 18.6% of ABR and have a weighted average lease term of 11.2 years. State of Andalusia, okay, that's 70 government office properties in Spain. Metro Cash and Carey, so that is wholesale stores in Italy and Germany. Hellweg, extra space storage, that's a big one in the United States. 27 net lease self-storage properties. OBI Group, it's a DIY retail property in Poland. We have 19 grocery stores and warehouses in Croatia. We have 3 K-12 private schools in the U.S. The base rent is 1.5. Lease term is 20.5. I can't even say this. This is a grocery store and warehouses in Spain. Eskai Sociedad, I'm not going to even try to say it. Berry Global, 9 manufacturing facilities in the United States. The lease term, years remaining, is 13.9. So that's their top 10. So I'm going to go over a few more things. Revenue, dividend history, and FFO. And like I said, bigger is better. And then usually there's an increase in revenue. So this is annually in millions US dollars. 2016, 941. 2017, 848. Big deal. 2018, 885. Big deal. Okay, so a drop from 941 to 848 and 885. But guess what? 2019, 1,232. 2020, 1,209. Blame the pandemic. 2021, 1,331. And then 2022, 1,479. So that is a huge increase from 2016 to 2022. Now let's go over some FFO information. Okay, the FFO is 5.21. The PFFO is 13.92. The dividend rate, which I'll go over, $4.27 with a yield of 5.89%, and the short interest 3.23%. Notice it really doesn't mention PE because, again, we don't care about PE. So I'm going to go over an recent article and then go over their dividend history. This is on April 28th, 2023. WPC came out with quarterly funds from operations of $131 per share, missing the Zacks consensus estimate of $132 per share. This compares to the FFO of $135 per share a year ago. These figures are adjusted for non-reoccurring items. The quarterly report represents an FFO surprise of 0.76%. A quarter ago, it was expected that this real estate investment trust would post an FFO of $129 per share when it actually produced an FFO of $129, delivering no surprise. Over the last 4 quarters, the company has surpassed FFO estimates 2 times. So Right here, I just want to go over this real quick. WP Carey, which belongs to Zacks REIT and Equity Trust, other industry, posted revenues of $427.79 million for the first quarter, ending in March 2023, surpassing the Zacks consensus estimate by 1.90%. This compares to a year ago revenues of $348.44 million. The company has topped consensus revenue estimates 3 times over the last 4 quarters. So that's one thing that's very important. I always like seeing how they do against Zacks. That's another thing which is an indicator for me. I like outside sources and research, and Zacks is pretty legit, so I like the way things are going with their articles. Now let's go over their dividend history, and I always refer to Zacks as well. Let's start in 2011. Here's their dividend history: 51 cents to 55 cents, 56 cents, 2012, 57 cents, to 65 cents in 2012, to 66 cents, 2013, 82 cents, to 84 cents, to 86 cents, to 87 cents, to 90 cents in 2014, 94 cents, 95 cents, and then 96 cents in 2015, 97 cents, 98 cents in 2016, to 99 cents, and then they hit $1 in 2017, 101 in 2017, 2018, 102 to 103, 2019, 104, 2021, 105, 2022, 106, and then 2023, 107. So their payout ratio is 81%. That's going to be high with REITs. Number of dividend increases in the last 5 years is 20. Dividend growth in 5 years is 0.86%. That's fine. You're getting slow dividend growth. This is something that I'm hoping, and there's no guarantees, this is not financial advice, I'm hoping once I reach 200 shares, that I get $200 from these guys so I can start buying my other dividend growth stocks. So I'm not getting a lot of consistency with dividend growth, but I'm getting consistency with dividend distribution, which is important. So again, that could get me with taxes in the long run, but that's fine because, if I just sit there, reinvest the dividends, and then let it fly and eventually flip it, I'll be in pretty good shape. Because think about having like 200 to 400 shares and getting quarterly dividend income of $200. I mean, I can use that dividend to do a lot of things, pay for your rent and your utilities. There's just a lot of opportunities. So I'm going to let the passive income fly and then flip it. So again, 5.89% dividend yield. If you bought 1 share, you made $4.27. So I like the way things are going. I like my decision that I made. Let me know in the comment section what you think. And also in the comment section, let me know what you think of WPC Carey and give me some stocks to review. If I like them, I'm definitely going to post them. All right. So I just wanted to really reflect on and I feel good about it. I'm going to say this again about buying WPC Carey. This is not financial advice for entertainment purposes, only disclaimer in the description. Make sure you hit that notification bell after you subscribe because I post a lot of videos. I just did one on Weyerhaeuser. I think it was like a edit error or something. I couldn't really conclude everything, but I hope you enjoyed that one as well. Take care and have a great Wednesday.